Yeah, not too bad. I see you've recovered from that awful storm yesterday. How did that go?
Oh, that's a drama. I've been shoveling dirt all night tonight, trying to clear the driveway. All the trees have been down, and it's going to be a bit of a weekend cleaning up, that's for sure.
It was violent. I know I didn't take you too seriously when you warned me about it on my walk yesterday, but I do regret that because it absolutely bucketed down, and I had to call for emergency assistance to my wife, who had to come and pick me up, and she almost sort of stacked the car coming to find me, mate, because, I mean, there was so much rain, she couldn't see the road at all.
Well, the stat for here, it rained for about an hour, and we got 60 millimetres.
Oh, gee, damn buckets.
And 5 hours worth of no power after that, so that was fun.
Well,
anyway, we're here tonight to show some people how to use Algowizard, I believe.
That's it.
You're going to teach me how to do it, and I'm going to take on the role of the uneducated, which I'm pretty good at doing, and I'll just sit back and watch.
All right, mate. That sounds good. So, yeah, as Fred said, tonight we're looking at Strategy Quant, in particular, how we use the Algowizard module of Strategy Quant to develop some very simple strategies. These are symmetrical trend-following strategies. I just wanted to show you a single example. Once you understand this example, then you can quickly develop your own trend-following strategies using the same style and principle. And then we'll take this for a road test within our custom projects function, develop some strategies, quickly compile them up, and see how they trade as a compilation. So I'm just going to share my screen now.
So, Rich, tell us a little bit about Strategy Quant before we get going. Is this something we can try before we buy, or how do we get hold of this product?
Yes, so within our forum itself, we offer two services. One is we offer this in-house workflow process, which works solely within MetaTrader 4. But for those people that want to shell out a bit of money, they can acquire Strategy Quant X, which is third-party software. We've obviously bought it ourselves, and we're pretty impressed with its functionality. So recently they did a major overhaul of the entire platform, and now includes all of these bells and whistles, probably much more than we'll ever use, but a certain amount of it is very relevant for our trend following systematic development processes. So we can use this third-party software as a very convenient tool to achieve what we want to achieve within our trend following space.
Yes, this is not our software. This is commercial software that you need to go and purchase directly from the suppliers.
That's it, from Strategy Quant itself.
Okay.
But look, we're not here to endorse it or whatever, but we certainly use it, and we think it is a good sort of addition to our arsenal. And its functionality is very bit large, so very useful. But so in previous video episodes, we've taken you already for a road trip through Strategy Quant in the development of these custom projects. And within that process itself, we used the builder function of Strategy Quant, which is this module I've just selected up here. And this builder module was where we allowed the Strategy Quant to develop its own trend following solutions within a regime dictated by core design requirements. So within the building blocks function of the builder module, you can specify what indicators you want to use, what method of entry type, what method of exit type, and you select the parameters within the build function, and then once you've specified the constraints within which Strategy Quant will do its data mining, that within the builder will generate its own algorithms. But what we're saying is, well, there's an alternative way to do this, and you can use the Algowizard itself, which is this model here, to actually develop your core designs themselves and then take them into the data mining environment. So that's what we're going to be looking at today.
Why do we want to do this? What's the why do we want to generate our own? What's the advantage of this?
So the advantage of this is that we strongly specify the need to develop core designs before we undertake data mining. And the reason we do that is that we want our particular designs to respond to or target a particular form of arbitrage we're trying to take out of the market. So we have defined ourselves as trend followers. So therefore, in our core design, we specify our core designs to capture trending environments. So we cut losses short, let profits run. That involves design specifications to achieve that. And by specifying this core design first, we know that we are targeting the particular form of opportunity we want to target. So we want to target trend following. If we allow Strategy Quant to do it itself, it could data mine for any particular type of market opportunity.
So what you're saying is that within the breadth of the possibilities, we're looking for solutions that are trend following in nature.
Yes.
And so when you talk core design, you're talking about the limitations you're putting on where Strategy Quant can go and look for possible entry and exit conditions.
Exactly, Fred. So our core design principles for trend following is we must cut losses short, let profits run. So that therefore dictates we must have an initial stop. We must have a trailing stop. We don't apply profit targets. They're general principles of that mantra, cutting losses short, letting profits run. The second thing is we don't want to be trading all the time within markets, and we only want to we want to participate in opportunities when markets reach their more extreme conditions. So that therefore responds to these fat-tailed areas of the distribution of returns that we want to target. By having a trend following model that targets, for instance, the short time frames, you'll be competing with noise and mean reversion. And whilst there might be trends within that context, there's a lot more noise and a lot more mean reversion. So you won't necessarily be as profitable as if you stepped out and targeted the longer time frames like the daily or the weekly and stretched it out. So you're only targeting when markets get to sort of extreme levels. So that specifies the core design framework, and we can do that within Algowizard itself. So by working within the Algowizard module, we design the parameters, the parameter sets that we use, and then that therefore constrains the opportunities that Strategy Quant can work within. So when we take it to the data mining phase of development, it therefore has to work within those core design constraints. So within Algowizard itself, the first what we want to do, I'll show you a custom project. So here I've got 3 different types of trend following solution. There's actually 9 or so different projects here, but there's really only 3 different types of systems. So we've got a Bollinger trend following retracement system, which is the first 3 custom projects here. Then we've got a Donchian breakout system that also uses an ADX as an indicator that needs to be met. So these 3 is a Donchian breakout using the ADX rising indicator as well as a Donchian breakout. And this is another form of breakout which uses the Donchian in addition to a simple moving average. There are 3 opportunities here. So with these 9 that I've specified here, don't worry about these last 3 ones there. They're just generic ones that we're working on currently. But these 9 here are just 3 different broad core designs applied to different asset classes, CFDs, Forex, and indices.
And why have you chosen to split them up and not have them all under the one umbrella?
Because the CFDs, the Forex, and indices have different money management specifications in their settings. For instance, Forex has different decimal places, different numbers, or different minimum volume requirements to what the indices and what CFDs do. CFDs, the minimum on Permutation is we can only operate within a minimum lot of 1 lot. Forex is a minimum lot of 0.01 lots, or a micro lot, and indices is a mini lot of 0.1 lot. Because you've got the different money management specifications, you need to separate them out for our data mining processes.
Okay, that's cool.
Okay, so these are, now I'll show you how I developed this Bollinger retracement system, and I'll show you what I initially did. The first thing I did was I went to my MetaTrader And I looked at a core design that I think satisfies my core design requirements of trend following. And I wanted a solution that was different to my breakout technique. As everyone knows, a breakout technique means that you at least catch every trending environment, but sometimes you don't get the optimal position size. But with a retracement entry into a trend, you can get a very good return to risk with the position size, but you don't necessarily catch all trends. So by having these different combinations of trend following entry, we're diversifying our entries into trends which offer correlation benefits when we get to the end of the exercise and we compile our portfolio. So this is a retracement entry system, and what I've done here is I'm looking at a Bollinger band as a method to determine a trend retracement. The way I do that is I specify that a trending condition is when price sits above a 200 simple moving average. So this is a long market environment where price sits above the 200 simple moving average. If price sat below that 200 simple moving average, we'd be in a short market environment. We're looking for short entries. But in this condition here, clearly price is above the 200 SMA, so we're looking at a long market entry. So trend in general is bullish or long. Now I'm looking for a retracement into that trend, and I'm using a Bollinger band as a method to determine a retracement entry. The way I do it is I set a rule in place. In this particular rule, I say, with this particular Bollinger band, I'm waiting for a condition where this lower band is breached by price. So in this instance, where the open of the bar sits below the lowest Bollinger band level, I'm ready to pounce as soon as the open then moves above the lower band and starts retracing back into the general direction of the overall trend. So that blue line I've signified there is a potential entry using the system that I want as a retracement entry into trend. And what I've done, Fred, is I've used your trailing stop solution here to showcase how we would trade this particular trend entry system. That would be our trend entry signal on the open of this bar, and then I have an ATR stepped trailing stop that follows in accordance with price, and ultimately when price hits that trailing stop, we exit that trend. Does that make sense?
Yeah, no, I get that. And so what you're showing here is not the EA in action or anything. It's just you plotting some indicators on a chart and trying to figure out what your core design principles are going to be for this particular style of trading.
That's it, mate. That's exactly right. So, our members can do this in whatever form of trend entry they want. It's best to specify what you're looking for first. So then we know that we need to deal with a Bollinger band, we need to deal with a simple moving average, etc., etc. So once we've done that with our core design, we can move to Strategy Quant itself into the Algowizard module. And what I've done here, just to speed things up, with this Algowizard module, we go to our settings here, and we're going to be applying this core design to Euro USD. In this case, I'll use Euro USD that's provided by Dukascopy, and I'm going to use from 2003 up to, say, current day. That's fine. Selected time frame only, that's fine. And spread, I'm going to use the current spread, which is 10 points at the moment. So I'm going to use 1 here, which is that signifies 10 points. In relation to the trading options, I only want this particular strategy to trade once a day. So the only thing I change on this tab is the maximum trades per day of 1. Also note that this trading strategy will implement itself off the open of the bar. So that's the only time it's going to look at whether it enters a trade, and there'll only ever be 1 maximum trades per day. Don't worry about the ATM function. That's something under trial by Strategy Quant at the moment, which should be good once it's developed. The money management for just this initial design, I'm just going to specify risk a fixed percent of account. We'll be changing this within the Algowizard module itself, and I'll show you how we'll be doing that. And in the advanced section at the moment, I won't turn this on. When I turn this on when I want to, when I've finalized my design and I want to save it as a template, and I'll show you what happens at that stage. But so the way I initially set this up is we have our trading signals as our first tab here. Then we've got long entry conditions, short entry conditions, long exit conditions, and short exit conditions. And I'm just going to quickly race through this. So for the this is a long entry signal. So my long entry signal, I'm looking for a Bollinger Band. So if I go to this selection of indicators, you can see I can select as many indicators as I like here, but in this instance, I'm looking for Bollinger Band, and I'll just go to where Bollinger Band is. I'm just going to find, here we go. Now within the Bollinger Band itself, there are lots of different possible signals that Strategy Quant allows you to take. You can do Bollinger Band closes above lower band, closes above upper band, etc. Now the one I'm particularly wanting is I want the Bollinger bar to open above that lower band after, on the prior bar, it opening below. So I'll just flip back to that example. So on this trade entry here, we'll notice that the open of this bar was below the lower band, and then when the open is above that lower band, that's a signal to entry. I'm going to replicate that in this rule here by selecting this here. So that's therefore selected. The bar opens above the lower band after opening below. Now at the moment it specifies its own variables here. Now because I want to take this strategy, once it's been designed and developed, to the data mining process, I don't want these variables to be fixed. I want to set up a scheme of possible values here using the permutation function that we have within algo generation. I'll show you what I mean. The first thing I need to do to be able to activate that function, though, is I come to settings here, go to the advanced, and I turn on this template function. By turning on that template function, I'll go back to it again, you'll see it's now turned on. When I come here, you'll see that I've got the period. At the moment it's sitting at a period of 40. Now I want to change this to, I'll just get it here, won't be a sec, mate. I want to change it to a Bollinger Band that ranges from a minimum of 10 to a maximum of 100 with steps of 10. That's how I spell it out in my, my definition here within the period settings. Also, the deviation itself, I want to have a range of different variables to test. So in this case, I'm going to set this from a range of an initial setting of 1 up to a maximum of 3 standard deviations with a step of 0.25. So this therefore means when I take this designed module back to the data mining process, it'll run through all of those particular combinations and see which variables produce the better results. I'm also going to define this, this long entry with a particular name. In this case, I'm going to call it the Bollinger bar entry. So that therefore specifies this set of conditions I've specified here. It gives it a particular unique identification. I'm going to select confirm here, and you'll notice now that the Bollinger Band opens above after opening below now has this random permutations using that stepped method defined within its definition. I want to keep the standard simple moving average as a straightforward, simple 200 period moving average. I don't want to change that, but if I did, once again, I'd come into here, and in a similar way, I would specify I want a random different possible values, and I could stipulate it there. But in this case, I want every single one of my strategies to look at the 200 SMA rule as an entry condition, but I do want to check different variations of the Bollinger Band. Now, once I've set that for the long entry signal, I therefore want to have a symmetrical rule for my short entry signal, which is this signal here. Now, rather than specify its own conditions, I want it to refer to these long entry conditions and simply apply those same step values within its settings. So you'll note that my short entry signal is the bar opens below the Bollinger Band after opening above. Well, that's the symmetrical condition to the bar opens above the lower band after opening below. Where now bar opens below the Bollinger Band, upper band after opened above. So this is now going short. But now what I want to do is I want to specify what we call same as, and I want to use the same as the Bollinger bar entry I defined previously. And for the deviation, I also want that to be same as the Bollinger bar entry condition. Once I select confirm, you'll see now that the rules are symmetrical and the same, so we get a symmetrical long or short entry condition.
Hey, Rich.
Yep.
Does that mean on one EA that's created, they'll use the same Bollinger Band criteria? Or?
Correct. So I'll just go to, just to demonstrate this, I'll go to an example that's been generated, and I'll come here. We'll go to the rules. So with the Bollinger Band open condition, you'll note that our simple moving average was 200. That's the same all the time, and that's therefore long or short. The Bollinger Band's open period of 20, this will be the same for both long and short. And then we've got these other rules here. So when I come to the long entry signal, it's referring to that single 20 period Bollinger Band, and the just looking at what the standard deviation is. The standard deviation in this case is 1.75. But
so if you didn't select same as, could you end up with a skewed long versus short?
Yes, or you could do that deliberately if you want, if you don't want the same signal to be assessed on the long versus the short. So you could let it run its own random criteria within a stepped range, but by not using the same as function, you could have different results.
Is that necessarily good or bad, or just a function of whatever you want to try?
Look, I look for simplicity in my design, so I try and simplify as much as possible. So I'm looking for a symmetrical outcome here, but it doesn't mean that's not what you need to test. You can do whatever you like, but that's just the guidance that I do myself.
Okay, thank you.
So that's the long entry signal and the short entry signal. Now, when we come over here to the long entry condition here, this is where we look at our stops and our trailing stops condition. So in this case here, when I'm entering at market on this signal. So what I want here is I wanted to use a similar method to what I applied with my trading signals in determining a range of different ATR values. So I want a condition to test of a move stop loss to break even, and I wanted to use an ATR based value.
Why are we using ATR?
We're using ATR so that we can apply this not just to Euro USD, we can apply it to any different market, and the ATR adjusts each market for their inherent volatilities to standardize it. So that's a very useful tool for us, using ATR for position sizing as well as our stop placement. So here, in this instance, I just wanted to test an ATR period of a 20 bar look back, but I do want to vary the multipliers used for the ATR. And in this case, my move stop loss, I want to generate randomly my move stop loss to break even, where I wanted to work within a range of 1 up to a maximum of 5 multiplier with steps of 0.5. Once again, with a stop loss, I also want to use an ATR based value, and 20 period ATR is fine for me, but I do want to randomize or randomize this multiplier. So in this case, I'm going to use the same values. I'm going to use 1 to 5. So I'm going to copy that down here. I'm going to a minimum of 1, a maximum of 5 with step of 0.5. The trailing stop, once again, the same thing, but here I want to increase the range from an initial trailing stop of 1 ATR to a maximum trailing stop of 10 multiplier with a step of 0.5. And with my trailing stop activation level, I also want to test this out, using these values here. So I'll just set this up. So now I've done this for the enter at market for the long entry condition. Yep.
Before you leave this,
yep.
It's possible that during data mining we're going to get some crossover of settings. Is there one that takes precedent over the other? In other words, you might have a trail that kicks in. You've got a trailing stop that kicks in, say, on 1 ATR, but you move to break even, doesn't move till 5 ATR. So what actually happens?
Well, it's going to try all variations, but it's just going to, dependent on the criteria we use for selection, it's going to select or rank it in accordance with our performance criteria we put in there. So it might do these different variations. It'll do all variations, but in as far as the net result at the end of our entire process, once it's gone through all of the steps of our custom project process, the end result are pretty powerful EAs that have gone through all of these hoops. If there are any conflicts in the code, it's resolved them, and we've got something that is tradable.
Yep. Okay. Thanks, mate.
So now we want to apply these exact same settings, which is applied under the idea of enter at market, to all of our short entry conditions. So I've clicked on my short entry here. Now, rather than having to set this all up again, all I do here is I do this same as function. Once again, same as function. Notice how it's using the ID of the long entry, enter at market 1, same as function. Now that will ensure it's symmetrically applied. For the long exit, we don't need to do anything here. For the short exit, nothing there. And now we've therefore created a design that then we can take to the build module or the custom projects function to run data mining using that design. So I save this particular design, I give it a name, and in this case I'll call it Bollinger retracement entry in the trend. Here's one I prepared earlier. And now what I do is I can take that design to the custom projects phase, and what I'm going to do is I'm going to go into this Bollinger retracements using 4x here, and I'll show you how I've applied that template. So that template now resides in the build strategies phase, and when I go to the full settings of the template, you'll see here when it says what to build, I am selecting, I want to use a strategy from a template. So I created this template called Bollinger retracement into trend, and it's therefore going to use that template in the data mining process. Down here in the additional build configuration settings, I just select, I want entry symmetry once again, even though I have already explicitly coded that in the Algowizard. I wanted to use SQX signals, random generation. These are fairly default settings I've set here, but just take note of these. If you're trying this yourself, you might want to use the same settings. Notice a profit target not required because we're using a trailing stop condition. The stop loss is an ATR-based stop loss with a coefficient that ranges between a minimum and a maximum. And then within the data tab here, I'm going to test this on Euro USD using the fastest time frame with a spread of 1 over a range from 2007 up to 2020 on the D1 time frame. In trading options here, I just need to check that maximum trades per day is set to one trade per day, which I've already explained. In the building blocks, what I want to do here is I want to make sure that there are no building blocks selected because I've already specified the design within my Algowizards template. So that should be sitting at 0 blocks detected, indicators 0 blocks selected, stop entry blocks 0 blocks selected. But over here, I want to tick enter at market condition. In the exit types, I want to check test move stop loss to break even condition, which I've already incorporated into the Algowizard design, the trailing stop condition, the stop loss condition, and a trailing stop activation condition. Then I don't use anything in the ATM function, which is under trial by Strategy Quant X. In my money management, in my build strategies, I put how I want to test this outcome for this particular first stage. And then I cross-checks. I want to undertake a cross-check because in my initial test, where it was selecting the fastest time frame only, I now want it, once it's run through that iteration, I want it to then check on high precision data. And then these are the ranking criteria. Now, I won't go through all of these as we've already done previous videos on how to set up this custom projects function. But you can see that I'm using that Algowizard template within my custom projects. And when I run this custom project, which has got all of these different steps of the workflow process, you'll see the results down here. Start off with, in the first phase of the build strategies phase, we had 892 variations that achieved the ranking criteria. Then when it went to the multi-market phase, you'll see that it significantly reduced in number down to 382 algorithms that passed the multi-market test. In the slippage test, we had a slight reduction down to 372 algorithms. When we applied it to our full data history of duchoscopy, it reduced to 369. When we then applied it to our Pepperstone data over about a 50, 60-year history, it reduced it to 352 algorithms. And when I applied the recency test on it, it therefore, of the 352, it selected that there were 147 in there that solutions that were robust and also met recency conditions and performed fairly strongly during more recent environments. So what I want to do now is we'll just go to the code of an example, which so when we go to the source code here, you'll see that the code always operates around the principle of the Bollinger bar retracement entry. So in every particular variation that's created, it's all working around that core design principle that we've embedded into the Algowizard. If I click on this one, you'll see it here, but we've got lots of different variations that have passed all of the testing criteria. So just to sort of end this up, Fred, what I'm going to do is I'm going to say, right, let's see how robust this little beast is. So what I'm going to do is I'm going to rank my 147 final solutions by return to drawdown ratio. And what I'm going to do is I'm going to take the top 10 solutions. So they're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm going to take the top 10 solutions ranked by return to drawdown. And I'm going to merge that into a portfolio EA here. And then what I'm going to do is I'm going to save that portfolio EA as a MetaTrader 4 expert advisor and with a risk fixed percent balance for its money management. And I'm going to create an algorithm. So I've just created an algorithm here, which I'll call portfolio, let's call it portfolio 1, 2, 3, which is times 10 solutions. So I'll save that into my directory. Now what I'm going to do is I'm just going to load that into my MetaTrader. I'll just get it up, won't be a second, mate.
We're pausing for effect here, aren't we?
We're pausing for effect here. What did we call it? I can't remember what we called it.
Portfolio 1, 2, 3.
Where did I save it? That's the question. Wait one. Pausing for effect and also pausing for stupidity, mate. Wait a sec. I'm just going to go to those 10 or those strategies. So where did I save it? I saved it into here we go. I'm saving it again. Times 10. Righto. I'm just redoing it, resaving it into a directory I know that exists. So here it is here. I've now created the strategy in MQL4. Now what I want to do is I want to put that into my backtester within the strategy, the MT4 environment, which I'm just going to do as an expert here. We'll just load it in there. Now I'm just going to quickly compile it. Get rid of that chart. get my strategy tester up. Here it is. That's the EA I want to use on the Euro USD. I want to test from 1980 up to 2021. Let's do it right up to current day. What's today? It's the 3rd of March.
Why are you selecting a date outside the range that was used to develop it?
Because so within the testing environment, we've undertaken our design and data mining. Now this is effectively an out of sample test where we can see if it's still robust when it's outside of the range within which the algorithm has been designed within. So we're now in an out of data sample test here. We want to see if it stacks up. So, okay, I've got it here. I've just done expert properties. I'll pretend I'm trading this with $50,000, 10 strategies. All I've got to do down here is I'm going to trade with 0.5% trade. No, actually, because I've got 10 strategies, let's go 0.25% risk per trade, which means 10 by 0.25. Fred, what's that?
Bit more than 1.
Okay. Money management decimals, because we're dealing with Forex, it's 2. Minimum lots, we know it's 0.01 for Forex, 100. We've got up to 10 trades occurring per day because we've got 10 different solutions here that all trade at least or up to once per day. So potentially we could have 10 firing together. I wanted to trade on Euro USD, and I'll just put a delay in here, even though in the backtest environment it doesn't use this delay. It's just working off the open. So I've set all these criteria up here, and now I'm ready to run the test. Let's see how it goes. This is a very quick and rugged test that we're applying here. We haven't, for instance, ensured that each one of these EAs that we've selected out of the 10 can validly work within MetaTrader. We're just assuming that they all do, but I'm just using this as a demonstration of how we take this Algowizard into the data mining module and then undertake our data mining, then bring it into MetaTrader and undertake testing. So I'll speed this up now. Things seem to be going pretty well, but I'll just speed it up and we'll see how these 10 perform. Starting to look good, Fred. What do you think?
Yeah, it did its typical thing with trend following. There's a few losing trades initially, and then the longer ones hang in, and off we go.
Exactly, mate. So there you go. That's the result of the very quick and nasty we did of those 10 solutions that were data mined using the core design specified within Algowizard. We go to the report. 1.74 profit factor, maximum drawdown 15.11%. Pretty good result for that entire period, mate, and pretty robust set of EAs.
Yeah, I guess my only observation is that you really need to get your head around SQX before you can delve into this, because there's lots of stuff going past me there that I haven't experienced.
Exactly, mate. Exactly. But at least, so for our members, when they're using SQX, some of them, I know Izzy's already worked this out. He was the one who actually showed us how to use the same as function. But as you use SQX, you'll at least be able to use this as a guide to perhaps get your head around some of the things. But it is a comprehensive platform, mate, that does take a lot of time to understand.
Yeah, well, thanks for that, Rich. I now can go and build myself some algos.
Yeah, that's fine, mate. And look, just to specify, I did that for a sequence of 3 different types of algos: the Bollinger retracement of the trend, the Donchian breakout, and the Donchian breakout using the simple moving average. All 3 of these were designed within the Algowizard framework. So yeah. But
so once you get your head around it, and I know we flashed through that really quickly, but it looks to me as though you could be developing a portfolio within, about an hour or so?
No, well, see, that was a test for Euro USD because we trade across a broad universe of markets. That actual this custom project here, whilst I showed you the end result, if I go into this actual process of going from 892 down to 148 probably took about 3 hours to run.
Right. Okay.
In the Strategy Quant environment, and that's just for Euro USD. But there's a lot further treatment that we haven't shown you here. We've shown you a quick and nasty approach, but when we get to this final stage and we take it to Quant Analyzer to then compile our best portfolios, as we've shown in prior videos, that sequence adds on another couple of hours. So you've probably got almost a day per market. So if you're using a universe of, say, 30 markets, it could take you about a month to generate your portfolio, but it's a lot quicker than in-house process.
Yeah, well, in-house we're running backtests, aren't we? Where here it's all being done in external language of some description.
Java. I think this is JavaScripted language, this one. Yes. Yep.
Excellent, mate. So you can see the power of this software.
Definitely.
And just to throw it a comparison, we did data mine the same strategies in both MT4 using our own and SQX using StrategyQuant, and the results were pretty comparable, weren't they?
They were similar. Look, there were a few more bells and whistles in your in-house program because we specifically responded to a couple of issues that StrategyQuant doesn't. For instance, the bumping into the minimum lot size, ensuring that we can trade these within the live market with a sufficient initial deposit, all of those sort of things. We've already embedded that within the code of our in-house, well, you have, mate, of the in-house module, but it's not within SQX. So you do need to be careful of that within SQX. Also, SQX, for instance, doesn't look at the impacts of swap. You can only find that impact when you bring it onto your broker's platform in MetaTrader 4. But as your in-house models, we already deal with swap as part of the integrated package that is that in-house process.
Good. Well, thanks for that, mate. I now get a bit of an understanding. So hopefully people enjoy this and give us some feedback. Plenty of questions. You can ask plenty of questions, Richard will be able to answer them.
Perfect, mate. Okay, thanks everyone, and see you, Fred.
See you, buddy.
Bye.